to many, this might be a very tough market. And to me, it has been a quite volatile market, and we've had to navigate through that. However, over here with my fund and on this channel, I happen to be, and I hope you are as well, navigating this confidently. And I think we have a pretty good roadmap for the next week or two, which seem to be pretty crucial weeks. And we have certain things we're looking at, and we're going to discuss those today, discuss how we're positioned, discuss what we've been doing, and where we're going forward. So first, let's just give a little bit of a quick overview of what we did today. Did some minor additions, added to some existing positions. Most importantly though, took the SPY put options off the table. On Friday, we did similar stuff, added to some positions, and we had been bearish prior to the last few days. There was no real optimism over here, okay? It was signs of a market pullback is occurring. And now it's kind of like signs of a capitulation is occurring. But hold on, we're going to get to that because we have a negative event later this week that we think might actually be negative, and we have additional commentary to discuss this more that hopefully will provide some thoughts for you. Anyways, took the SPY put options, not at the low, but close to it. We got a little bit more of a bounce. I saw some commodity stabilizing. It didn't make sense to me that energy was down so much, that a company like Rio Tinto, that is a partnership with Tesla, that's trading at 5 to 6 times earnings with a 10% dividend, was down 4% because China's closed for like a couple weeks. Didn't really make a whole lot of sense to me. Obviously, there are arguments to be made there, but I heard people say today, China's going to open back up. Okay? We had oil at negative 37. It was at 129. Things can change particularly drastically with commodities. So they are volatile. A lot of people try to avoid them because they're volatile. But when things have, intrinsic value, which commodities do, and like stocks do that we focus on here, ultimately fundamentals, intrinsic value, these kinds of things, when they get too high, you sell them. And when they get too low or too volatile, too drastically low, too sharp of a slope for too long, you buy them. You sell them at the top, buy them at the low. So that's what we're doing. We're nibbling on some Rio Tinto down here. We're also adding more to our energy exposure. We had sold some previously, and early March videos, you can go back to that. We're adding to energy for like the first time in a long time. So we're taking advantage of this quick dip here. It's mostly, month, 2 month kind of stuff, or even shorter than that we're adding. It's not the same stuff we were adding last summer, last winter, where we were going, 6 months plus. We're not doing that anymore, unfortunately. We're high enough that we could just stabilize, and then we're, letting some premium dissipate. So we're really just buying the lows here, buying the fear, and we're happy to do that. So that's how we manage today. Those are our fundamentals. We are more so in the buy and the selling of the downside protection. However, that's not going to make a whole lot of sense with what I'm about to tell you. I'm fearful about Apple's earnings. Not because they're a bad company, not because the iPhone is slacking, not because of anything Apple has done in Cupertino, but because of China. The China lockdowns. I don't know if you remember back to the early pandemic, we actually saw supply chain woes. And if you go back to the early videos, you can really, these are like the first videos I made. First one, January 27th, 2020. I made videos virtually every single day from that day to today. Obviously, take small vacations, not feeling well certain days. Some days just don't want to say anything because I think my lack of talk and going to the previous video says more than making another video. But since then, besides that, basically every day we're making videos. Back in those days, it's very similar to today, China is closing down, and what was happening then was Apple shelves were empty. They were empty, okay? if you look at the car companies, their sales are down. Their sales are down, like some 15, 20% for the most part. Why is that? Because their production capacity isn't at maximum output. And I think Apple, well, maybe they didn't necessarily have that as much last quarter. That might be part of the commentary. And it might be an unknown. And in a market that is expecting and has expected these FANG companies to basically be perfect. Basically be perfect. Not perfect in the sense that they print unlimited money, but perfect in the sense that they meet all forecasts and then exceed those forecasts. So I think they might underwhelm because I listened to the news all day. I didn't hear a single mention of Apple and China and production. Okay? So my assumption just has to be that this isn't factored into the psychology of people. Like, this is just not a blip on their radar. However, it's a large and present blip on my radar, even though I bought today, because I think if we get a negative report out of Apple, we might have a down market on Friday. Might. The reason why I sold is because prices are pretty good. You know, I'm just going to name drop a little bit here. Shopify, 20 PE. I don't own it, but compared to where it was, aka an unreasonable PE where it was, 20 is like the range to be in. Like, that's when stuff is like, okay, as long as there's some growth rate, I can buy this stock. Okay? Netflix, it actually had a growth rate, actually increased revenue, and as far as I remember, net income year over year. That's good. 20 PE. I bought some. So a lot of stocks are there. The only ones that are not are Apple and Microsoft. Google, okay. I'll give it to the Google fanboys. I don't have the stock. I will admit it makes a lot of money and it is a very solid business. It's just not, I like to buy stuff that's super attractively well priced, and it is just decently well priced. So that's why we don't stick with these names. But anyways, today and Friday, I mentioned some stocks that were up and that got me into a little bit of a buying mood. And those companies were Jumia, CRISPR Therapeutics, Editas Medicine, and Virgin Galactic. All stocks I own, 3 out of 4 stocks of which I have recorded videos for on this channel, and are the only videos I have individually, as far as I remember, individually recorded as videos for stocks. Like, I actually made a video about a ticker stock. Only done that 3 times. Did that very early in my video making. You can go back, there's a whole playlist of just those 3 videos. 3 out of the 4 stocks I just mentioned, they were all, those 4 stocks, all up on Friday, all up again today. Why is this important, and what does this have to do with Apple? Well, these stocks are down 60, 70, 80, 90%. Unlike Apple, they have been down for over a year. The thing with Apple, Microsoft, Google, FANG, etc., is they're only down since November, okay? So the other companies, they've corrected. In my opinion, they are tremendously cheap. They are cheaper than they were pre-pandemic. I'm okay with buying them. Bring it on, rates. I'm ready. I'm ready. I'm ready to bring on the net worth hit. I dare you, okay? I dare you. Bring it on. Anyways, they are down. They have corrected. They are at good valuations. Attractive. I feel like I have an edge. I feel like when I buy a company like that, at that price, I'm getting a deal. I'm getting a steal. what Warren Buffett talks about in Benjamin Graham's Intelligent Investor, the idea of making a bad deal with Mr. Market. I think I'm making a bad deal for Mr. Market when I'm buying those stocks. I'm winning. I'm getting a good deal. That's what it's about. That's when you buy a stock. You don't buy a stock. Look at where people are getting obliterated. It's the people who bought Peloton and Zoom and Shopify way up there. That is a deal that Mr. Market wins. You want to beat Mr. Market. That's what we do. We outperform the market over here. Those FANG companies, I still don't feel like have that tremendous deal. The other companies do. The market was down big. All four of those companies I mentioned were up today at that point, at that time. They were up the whole day, basically. Maybe for like 15 minutes or whatever, they went a minuscule amount in the red. I think Editas did that. CRISPR did that. Jumia was my best performing stock today. Same thing on Friday. We had an even more aggressive day. It went from start to finish only down. Those stocks, which on any other day, except the last 2 days, would have been down, were up. I hope that makes sense to you why I'm bringing this to your attention. That's today's video. Feel free to ask any questions in the comments. And until next time, peace out.